One of the reasons why we wanted to get on here quickly is pretty much we had a situation with one of our clients, and we had an idea that we were tossing around, and we wanted to, just in case anybody might be thinking about this is something we should definitely talk about. We wanted to talk about assumable mortgages, and wanted to ask Angelo, can you explain briefly what the assumable mortgage is?
Sure. Especially now with the high interest rates, we're exploring a lot of different options. So the new purchaser of the home might be able to A, pay lower closing costs, and B, get a lower rate. So what an assumable mortgage is, it's exactly what it sounds like. You have the ability to assume someone's mortgage. So let's just say, Evans, you're the seller of a home. You purchased that home 5 years ago for $500,000. You took out an FHA mortgage for $480,000. The interest rate was 3%. The new buyer of your home could assume your mortgage at the low interest rate with the same loan amount. So there's a lot of benefits in regards to that because those rates are way lower than what's out there right now.
All right, you mentioned benefits. That's my next question. What are the benefits that a potential homeowner can get basically in this type of thing?
Okay, so let's go over the benefits for the homeowner and the benefits for the purchaser. First off, in terms of an assumable mortgage, every mortgage is not assumable. There's 3 different types of assumable mortgages right now. There's an FHA loan, there's a VA loan, and a USDA. Those are all assumable mortgages. A lot of people ask, well, what about conventional loans? Conventional loans are not assumable, but they are assumable under 2 certain situations. Situation number 1 is in a divorce, and it's a husband and a wife, and the husband or the wife is assuming that mortgage. They could actually have an assumable mortgage on a conventional loan, or a death in the family and an heir is taking over that mortgage. They could apply to assume that mortgage conventionally. Now, in terms of the benefits of the seller, imagine there was 2 properties listed on the same block, both for $700,000 in the New York market. Right now, if someone purchased house B, the current interest rate's about 8%. But let's just say house A had a mortgage amount of $550,000 or $560,000. The interest rate was 3%, and they could let everyone know, if you're purchasing this property, you could assume my mortgage, my payment, and my rate at 3%. The only negative to that side is they have to make up the difference on whatever that price agrees on. So if the purchase price is $700,000, the loan amount's $580,000, that buyer would have to come up with $120,000 plus closing costs.
So there is some cost to it, but basically there's major benefits as well.
Yeah. So one of the things you would do as a realtor and you're listing a property, number one, find out how much loan the client has, find out what rate the client has, and find out what type of loan the client has. If that hits all the boxes, then you could present it as an assumable mortgage. And if someone's looking to purchase that home, they just have to make up the difference. But let's be frank. If I have the ability to pick up a 3% interest rate as opposed to an 8% interest rate, Evans, how much more desirable is that house?
It's a no-brainer. It's more desirable.
Yeah.
You're getting it at a cheaper rate. All right. So my next question is pretty much, are there specific criteria or qualifications for the buyer that they have to meet to assume a mortgage?
Yeah, that's a good question in regards to that. It's just like any other loan. They have to apply and they have to qualify full income. So as long as they have the right credit score, the income to qualify for an assumable mortgage, then they would qualify just like any other traditional mortgage. But here's the best part. If they're assuming that mortgage, they have to qualify for less because their payment's less, the term's lower, and they're paying off more interest on the house. This is a little technical, but it's really important to talk about. When you take out a 30-year mortgage, the first 7 years, you pay primarily interest, okay? The last 7 years of a mortgage, you primarily pay principal. Now, let's just say, Evans, you took out that property 5 years ago, and you've been paying 5 years. Now, when I take over that loan in terms of an assumable mortgage, I'm only paying for the next 25 years. So I'm already into a lot more of the principal of that loan. and the payments go much quicker. So you don't even have a 30-year mortgage. You'd have a 28-year, a 25-year, 22-year, whatever loan amount that is, that's what you're going to assume on your end.
All right, so it's really important, basically, for the buyers to understand this, and also the realtors and also the sellers. Yeah, you have to talk to the professionals, find out if you qualify for this, to see if this is something that makes sense for you in your particular family and your situation. How I want to leave this with everybody is basically, if you find this is interesting, it's an interesting subject, basically, that you think you can leverage the power for an assumable mortgage. You don't have to navigate this alone. Contact me and my team. Our website, basically, our information is below. Feel free to give us a call. You can also reach out to Angelo if you have any questions regarding this type of loan. If you think that this might be a good fit for you, feel free to reach out to us. That's what we're here for. Angelo, you have the last words.
No, the only thing I say is with the current interest rates where they are around 8%, there's a lot of different strategies we're working on to make sure the new buyer is paying less in closing costs, have a lower down payment, and we're taking up different options. Did we talk SEMA purchase? That's the next thing we're going to talk about
That's another
after
video.
assumable. SEMA purchase is also a great way you could save some money on the property, and you could take that over, whether it's a conventional loan, FHA loan, VA loan, USDA loan. What that means is if the seller of the property has a $400,000, $500,000, $600,000 mortgage, you could assume that mortgage and you don't have to pay the mortgage tax. Now in Queens and the boroughs, because we're in New York, that savings could be 2% of whatever that loan amount is. So it's huge. So not only are we talking about assumable, we're talking about SEMA purchases. We're talking about rate buy downs. We're talking about closing cost concessions. So really at the end of the day, reach out to Evans. He could guide you in terms of finding the right properties. Reach out to me and we could talk about the different strategies.
It's very simple. Like Angelo said, give us a call. Phones are here. Give us a call. Pretty much text us. Send smoke signals. We're reachable. We're not that hard to find. Angelo, give them your phone number.
Yeah, best way to contact me is always myself, 516-902-3933. Just reach out, shoot me a text, or my email is always agionis@contourmtg.com. Let's get after it. Knowledge is key. I'm always available to answer a question.
And I'll give you my phone numbers. Basically, is 917-975-5985. If you want to go to our website, you can also go to mynymhomesales.com. If you have any questions about anything that we're talking about, we're here basically to do one-on-one consultations. We can do it over the phone. We can do it on Zoom. We can meet pretty much anywhere, whether it's our office or Starbucks, whatever. We're here to educate you basically and help you navigate through this difficult time and make these difficult times not so difficult. So we have answers. We're here to answer them for you, whatever the questions are. On that note, I'm going to wish you a great one. If you're trick-or-treating, keep it safe. Talk to you guys later. Have a good one. Angelo, what's your costume again?
I'm actually part of the Dallas Cowboy teams. So I just have to say the champs are here. Happy Halloween, everybody.
Happy Halloween, everybody.